Hi, my name is Steven. I'm the founder of My Amazon Guy. In this video, I want to be talking about inventory performance, or the IPI score within Amazon. And there's been a lot of changes recently to this, and I want to make sure I stress to you how important it is to monitor and manage your inventory performance with Amazon, or they're going to punish you with great fees and storage reductions. So I'm going to talk today about the score index, all the changes. I'm also going to go run a payment report and show you where to go to check to see if there's any abnormal fees that Amazon is charging you about that you're not aware of. So the first thing I want to show you is that this IPI score changed from a score out of that you need to be above 350 to now 400. So if your score is below 400 at 2 points during a quarter, the middle of the month, middle of the quarter rather, or the end of a quarter, you're going to see your inventory for the following quarter be reduced. So on this account, you can see there's a score of 569. And because of that, there is unlimited storage on both standard and oversized storage. So on this account, there is only cubic feet on the standard storage, nothing on the oversized, but there's unlimited all the way down. If you're an account that is applied for hazmat, you'll also see these two on the bottom right for flammable storage or aerosol. Most accounts don't need that or use it, but if you want to apply for hazmat, I definitely recommend it just in case you ever need it. So that was the biggest change in the last month and a half, where they raised the IPI score from 350 to 400. Essentially what's happening is Amazon has built hundreds of these FBA facilities around the country, and they've really run out of room. And everybody and their dogs has sent all this inventory to their storage warehouses, and some of that stock is simply dogs. They're not selling. They're not making any money for Amazon. So they're penalizing that harshly in some instances. So if you're on an account that has a score under 400 and you've been reduced, your storage limit capacity will be greatly diminished. You're going to see in this report here where to go to see what your storage limit is. And if they've limited you to the point where you can't ship more product in, your best sellers are going to stock out. And what you need to do about it is you need to do some inventory removals. Go to your Manage Inventory page and go click on Remove Inventory and ship some back. You can click on the Excess Inventory Report to see what areas or which SKUs are the worst performers, and decide which ones to do a removal order. You can also see here how much you've been paying in storage. So in this month of January, this account paid $136 in storage costs, which is very, very small, about 1% or less of the FBA sales revenue. So if you're an account that's selling 10K a month, but you're paying $1,000 a month in storage fees, that's a problem. In Q4, Amazon triples its storage costs, so you will see higher inventory costs during the Q4, but it's much less going Q1 to Q3, and that's because Amazon has way more room during the Q1 through Q3. So typically speaking, what a lot of Amazon sellers will do is they'll stock up right at the end of Q3 going into Q4 with lots of inventory right before that Christmas rush, and that generally works out for most people. So we've talked about how you need to be above 400. Well, what affects the score? There are 4 key areas. The most important one is excess inventory. If you've got a SKU that you've got 1,000 products sitting in an Amazon warehouse and you've only sold 30 of them in a month, that's a problem. You need to remove all but basically 6 weeks supply. Whenever you create shipments, I recommend you ship enough product to have a 2-month supply at Amazon that prevents any stockouts. But if you're trying to remove excess inventory, you should go down to somewhere between a 4 and a 6 week supply. So if you've only sold 30 units and you got 1,000 in there, you should remove all but like 50 to 40 units or so, and that's a big removal. How much does it cost to remove your inventory? About 50 cents a unit if it's standard size, 60 cents a unit if it's oversized. There are no additional fees whatsoever, so there's no cost for the box shipping or anything like that. It's just a flat fee per unit. Amazon really want to incentivize you in removing bad inventory. Where should you send that inventory, or what should you do with it? Well, if you've got a lot of excess, go put it back in your warehouse. If you're side hustling out of your apartment, put it in your closet or your garage or whatever you have to do. Or if it's an item that you're going to discontinue and get rid of, maybe you should just destroy it at 10 cents a unit. That's always a possibility. You could donate it to charity, or you could gift it out to your friends and family and just create lots of small shipments across the country. Same cost, no matter which of those options you do if you do a removal order at 50 cents a unit. Okay, so I'm going to transition actually, before we do that, so here are the top 4 influencing factors. So excess inventory is the number 1. That's where they're going to punish you the most. Sell through. They're looking for all of your inventory to sell through within 60 days. And if you don't do that, they will hurt your IPI score. Stranded inventory, not really a whole lot to write home about this one. If you've got a product that's stranded, you can find it in your stranded inventory report. Get that fixed. If you can't fix it, call Amazon seller support. They typically can help you rectify that problem. If you have a catalog removal issue, those are a little harder, but if it's just you need to flip it to FBA for merchant fulfilled, or there's another minor problem, getting that flipped is not typically a problem. The in-stock inventory is the fourth on the list. This has the least impact. They do not release the percentages of what the impact is, but based on seeing over 100 accounts, I feel like the in-stock inventory is weighted at maybe a 1/100th of the other factors. So if you've got a SKU that sells 100 per month and you run out of stock, they are going to suggest restocking that. But for the most part, it really doesn't have as much of an impact as the other three core areas. So if you have to pick between running out of stock or having too much inventory, obviously a stock out can hurt for sales purposes, but for operations purposes, it's better to run out of stock than to be having excess inventory. For marketing and growth purposes, running out of stock is detrimental. Don't do it. You want to keep in stock. Raise your prices at the last minute to slow down stock if you need to, but make sure you're not missing inventory by purely just forgetting to ship it, for example. All right, so the last thing I want to go over is operations reports for payments. So a lot of people don't know how to access this report. So you put your cursor over the report section and go to payments. Here you can see the transfer details of what's coming up. You can split between the statements and go back and forth. This section right here, the order section, really doesn't need to be audited that much, in my opinion. It's purely, you got your item, what it's sold for, minus the referral fee, which is 15%. Not a lot of things you need to do there. Refunds, yeah, if you've had a lot of refund issues, you might want to go audit that and check it out. And then finally, the selling fee section. This is the one where if you've got operations concerns. So if your IPI score is under 400 today, I would encourage you to make sure you check your selling fees section here. Click into this. It will show you a line item total on everything that's in here. So if you've got FBA fees for bubble wrapping, transportation charges, definitely check these out to make sure you understand all of these. Cost of advertising, all of these are normal fees, nothing to be concerned about. If you do a removal order, so like I mentioned, if you're disposing of something, 10 cents. If it's 50 cents per unit to ship it, you can see those fees here. But the one that I've been seeing on a couple of accounts where the cost or the IPI score went below 400 and they limited the inventory, and back on that IPI score, you would see in the bottom left that you have an overage. They're actually going to charge you an overage fee, which is a really big deal. Overage fees are super expensive, will be way more costly, charged by the cubic foot per item. So I've seen 2 accounts in the last week where one of the accounts had an overage fee of $4,000 for a month of overage. That is a tremendously big number, and you do not want to be paying for overage. And so the number one course of action is to remove inventory as quickly as possible if you have an overage. Do not delay, do not wait. Simply act today, get that removed out, because overage fees are super expensive. They're penalizing you big time. Now, let's say they've put a limit on your account where it's really excessive and you can't really operate your business, and let's say their cubic feet is down to like 25. That is really difficult to get out of, but at the end of the day, you're just going to have to fumble through it, remove the bad inventory, keep very low numbers. You're going to have to do some merchant fulfilled selling to make sure you don't stock out and keep your inventory numbers very healthy at Amazon. The other thing you could do is try and run some sales and promotions and just burn through some inventory units to improve your IPI score. The last thing I want to talk about is the other change. You're going to see here at the top, there's a little notice here. They've changed as of January 20th. The IPI score reflects both your recent and long-term storage inventory performance. That's a big change. So if you've been a bad actor for a quarter or two, Amazon's going to penalize you longer. Whereas if you had a good quarter in Q4, by Q1, you could turn things around. But now they're going to penalize you longer if you've had lots of excess inventory sitting there. So you can no longer get by having a bad quarter. You have to be good every quarter with your IPI management. Otherwise, you're going to be paying excess fees, overages, and you're going to be limited on storage. So those are all the things I wanted to talk today about all of the IPI changes and what fees to go look for. If you have any questions about the IPI, feel free to leave a comment in the video section or go over to myamazonguy.com and contact us for a consult, and we'll help you out. Thank you very much.